Welcome back to the BrokerTech Ventures webinar series. Today, we have three special guests on the series with me. We have Dave Miles, Ben Savage, and Bea Del Rio to talk about the Capital Tower. So first of all, everybody, thanks for joining us. And why don't we do some around the room introductions to kick this off? Bea, would you like to start?
For sure, and thank you so much for having us, Tim. It's such a pleasure. So my name is Bea. I'm investing with Vine Capital. We're an early stage sort of pre-seed to Series A fund with a strong Insurtech focus. We've backed players like Hippo or Unquark or HDVI in the space, and have spent a significant amount of time working with the BrokerTech Ventures team on just what they're doing or what you're doing to enable the broker automation side, which is extremely interesting, and there's so much to be done.
Thanks, Bea. Ben, how about you?
Sure. Thanks for hosting us, and pleasure to be part of this with our good friends at BrokerTech. I'm Ben Savage from Clocktower Technology Ventures. We are a purpose-built fintech venture platform based in Los Angeles. We invest broadly across financial services innovation, but have done 14 Insurtech related startups over the past 5 years, and it's a big part of what we do, and delighted to talk about insurance innovation.
Thanks, Ben. And Dave, our Iowan, we'll let you take the last intro.
Great, thanks very much. It is a real pleasure to be here, and appreciate the relationship with BrokerTech Ventures. ManchesterStory is Des Moines, Iowa based, a great insurance center. We are an early stage investor as well. For us, that's Series Seed and Series A, typically across the United States, and very much Insurtech focused. We're in 18 different companies now, and like the space, like the people that we get to work with, and certainly enjoy the relationship with BrokerTech. Thanks.
Thanks, Dave. And first question here, and Dave, why don't we start with you, is what brought you originally into the investment venture capital world?
Oh, well, a number of things. It starts with, I think, a real passion for innovation. And of course, that's what these startups are all about. Technology, and this is a great time to be investing in technology around insurance. And probably the most important thing, venture capitalists, I think, typically say the most important thing is the team. Well, the most important thing for me are the people that you get to work with if you're in the venture business. Every one of the entrepreneurs that we meet with is convinced that they're going to change the world somehow for the good. And it's really hard not to be attracted to that. Not everything's going to work out, but it's a great spirit and a great group of people to work with.
Yeah. Now, Bea, why the focus on like Insurtech and fintech?
For sure. So I actually, before coming into venture, I was in the Insurtech or insurance practice at BCG, Boston Consulting Group. Got to work with carriers on how to translate their strategy into like omni-channel, and how to really think about their strategic plan in 5 years. And that's my first foray into Insurtech, and thought there was so much to be done, but it was such an incredible industry, which is, insurance. When you're an outsider, you don't just realize how much of a people-driven business it is. And I think it just fits very well with what we love to do, what I love to do, which is very much what Dave said, which is working with people who want to change the world. So at Vine, we basically think there's a huge potential for this business, and we think we're lucky to have some strategic advisors and LPs that we can bring in to help these early stage companies at the start, by making the right introductions and helping them understand what later stage funds might look for in Insurtech deals, and in the end help that entrepreneur make their company great.
Ben, how'd you get started?
Well, I started my career as a venture capitalist, a long time ago, and did it for a few years, and then actually left the venture business and did investing in public markets for a while, and came back to venture after like really a 10-year hiatus away from the industry. when I think we perceived a secular opportunity for the first time to reinvent financial services, which of almost all the meaningful segments of the economy had seen the least disruption, the least innovation, and frankly, the least capital flow pointed at next generation services and ideas, certainly relative to the two other really big components of GDP, which are tech itself and life science. And so we felt that 5 years ago when we launched Clocktower, there would be a really interesting opportunity on a secular timescale, like a 20 to 30 year timescale, to create literally dozens of $10 billion plus companies in financial services that will displace a lot of businesses that really have been around for a very long time, because there were historically really high scale barriers to doing financial services that have come down radically. And as somebody who, I would echo what Bea and David said about working with great people, making a dent in the world. We also just find financial services fun. Like it's an interesting intellectual thing to think about. And the impact of changing financial services is, I think, outsized on productivity and on the economy, because there's so much of an impact you can have by reducing some of the friction costs and inefficiencies that exist in what is still fundamentally a financial system that looks not that much different conceptually than the way it might have 50 or in some cases even 100 years ago. Like insurance is in many ways not a whole lot different today than it was 150 years ago.
Right, and what's interesting is all three of you already in the couple of minutes since we've been talking here have mentioned the importance of people, relationships, culture, and sometimes Insurtech and fintech can sound kind of cold and kind of heartless, like this is not a people business. So what is important about culture and relationships and people that you guys are looking for when you're looking for great partners?
I can start with that. I mean, first of all, when we underwrite, teams, we have a very explicit values flag that we talk about and think about. Companies are just people. And if you're investing in a business, you're investing in a company, at the end of the day, there's some group of people who sit around and they make decisions and they wield capital. And the hope that you have as an investor is that the decisions they make will cause that capital to compound at a really attractive rate over time. But it's really about who are the decision makers and what are they going to do? Are they going to make high integrity decisions that are consistent with what you believe your values to be around how to treat other people and how to do sort of right in the world and ultimately do right by you as a partner? Are they going to make good capital allocation decisions, both in terms of who they choose to hire and the teams they build, the processes they develop, and ultimately the products they choose to scale? So we spend an inordinate amount of time focused on who management teams are, how they've come together, what their experience looks like, what their track record looks like, and do everything we can to just understand the decisions they've made in the past as a guide for the kinds of decisions they're likely to make going forward, within some bounded space. We don't invest in an Insurtech team and expect them to start selling books online. But you do everything you can from a values-based perspective to say, well, the decisions we make and the way we spend our time, what we prioritize, is almost always a function of what we value and what we believe in. So the more you can access those priors, the more likely you are to get it right when you make an investment decision.
Bea, anything you'd add to that?
Yeah, so, and I completely agree with everything Ben said. I think one thing that we're particularly focused on is what we call founder market fit. So why does this founder have a unfair competitive advantage to address the problem or the market that they're trying to address? Is it that they come from the industry? Is it that they come from have solved a similar problem in, for example, financial services, and then now applying it to insurance? And I think that is one of the key, I'd say, that's one of the key aspects that we look for in whether this founder is, or this founding team is, the right team. That helps. Another thing in terms of people that we try to do is identify latent customer demand. Many times the cool thing that you get investing in venture, right, is that these products, these solutions don't exist yet, but hopefully the problems do. So by helping founders identify latent customer demand through relationships with industry participants, we believe that is, lets us underwrite to the potential of a market that might not yet exist, and also is helpful to founders in that it brings them potential clients, right? By enabling them to have design partners, for example, or strategic players who can be the first contract, the first pilot, which at an early stage, pre-seed, seed, is really fundamental to how the company evolves.
Now, Dave, BrokerTech Ventures was founded by, the co-CEOs are Dan Keogh at Holmes Murphy and Mike Victorson over at M3 Insurance, two Midwestern-based insurance brokerages. You're Midwestern-based here in Iowa. When was the first time you heard about BrokerTech Ventures?
Oh, that's a good question. I don't remember exactly the first time that I heard about it, but I can tell you that we were quite drawn to it and intrigued by it from the first time that we heard about it. And it's not just because they're Midwesterners, although we might have a particular affection for that. I can tell you we passed on a lot of investment opportunities before BrokerTech Ventures was launched, where there seemed to be this battle between our agents going away as the current cohort of agents are approaching retirement. Are they just going to all retire and then it's all going to be search the web and type in insurance and see what happens? We thought that was a really simplistic approach. And what we like about BrokerTech Ventures, in addition to the people that we know, is I think one, it recognizes that everything's becoming technology enabled. Everything's a technology business, but it's about people. And so this is technology that allows customers to be better served, whether they're commercial customers or consumer customers. And we think it's very exciting that BrokerTech Ventures doesn't try to stake out exactly how that technology will be used, but is working on the customer experience and helping serve those end customers better with agencies.
So Ben, why does this alignment with BrokerTech Ventures make sense for you and for Clocktower?
Yeah, I mean, we generally think about innovation in financial services as breaking down into kind of two lines. There's a set of startups that are kind of playing offense and a set of startups that are to some degree playing defense relative to the incumbent providers. And the offense guys, who are sort of disruptors, generally try to minimize their engagement with incumbent financial services providers. Whereas by contrast, the defense players, the enablers, if you will, generally are trying to work with incumbents and say, hey, the world is changing around you. There might be new skill sets that are required to continue delivering your customers the experiences that they're demanding in this kind of environment. Like it's really easy to see on the consumer side. Amazon just delivers such spectacularly high quality consumer experiences. You can talk to a machine in your kitchen and like a box of toilet paper shows up at your house the next day. It's pretty impressive. And that sounds kind of silly and you don't really need it, but
we do it.
Right. And by the way, it turned out to be something you did actually need in 2020. Right. So, for an insurance company, like you're sort of navigating that and going, well, what am I supposed to do here? And I think the broker channel in particular, the distribution of insurance, was among the first areas where folks went on offense. It was easy to look at insurance distribution and say, this is a part of the value chain that looks really inefficient, looks like it hasn't changed a lot. There hasn't been a whole lot of capital pointed at this. And it tends to be a kind of graying workforce, very focused on direct human relationships. If the internet is good at one thing, it's really good at disintermediating that kind of business. And so I think a lot of the early Insurtech that started 5, 6, 7 years ago was very focused on disrupting insurance products that relied on a brokerage channel. And so when BrokerTech comes along and says, hey, we're going to be helpful at enabling brokers, at working with incumbent providers to give them the tools to continue to be successful for the next generational cycle, that's really appealing to us. And within our portfolio, we fairly explicitly try to balance the kind of disruptor enabler quantity in the way we build the portfolio. And we have a bunch of our companies that are really good partners to brokers, work with brokers, love brokers, and want to help brokers succeed. So I think the existence of BrokerTech to come along and help coordinate that, help facilitate those kinds of things, serve as an entry point for a big group of important brokers is really valuable to us, and I think really valuable to the community.
Yeah, now, Bea, how do you guys view co-investing and partnering with brokerages and insurance companies in these kind of startups and solution-based products?
I mean, honestly, it's the perfect example of getting latent customer demand. Like, it's a manifestation of just what we look for. I mean, our ideal scenario is we'll be, investing in a founder and bringing along as a, relatively significant part of the round, strategic players, such as both the BrokerTech Ventures, but also the individual firms behind BrokerTech Ventures, to be able to become design partners to these startups and early clients. So it's exactly how we like to invest. And I think it goes back a little to, actually how we got to BrokerTech, because it was through their portfolio companies. I spent a lot of time in Insurtech, had mapped out, exactly what Ben was saying in the sense of, there is a lot going, a lot in insurance that already works, but actually not automation on the brokerage side, on the distribution, which is pretty efficient. Like, distribution actually is an efficient channel, right? For more complex, particularly more complex products, P&C as an example, or the bigger lines of P&C as an example, but it's actually, they're enabling the brokers or the agents themselves to be able to do their work better, automating the back end processes, automating those things which are like repetitive, to free up time so that they can serve their end customer better. The companies that they basically give them data or enable them to have data at their fingertips so that they can have those insights that many times are known through experience, and be able to provide them through technology was a part of the thesis. And in that thesis, I came to several companies who were all related to BrokerTech Ventures. And that's when I reached out to the team and said, like, I think I really like what you guys are doing, because it's how we're thinking about the world. And, it's phenomenal to see that the industry has been able to, and I think it's pretty unique, that the industry has been able to get behind one effort to basically really digitize and accelerate the digitization, which is already happening.
Yeah, and we're in such an interesting time right now where you have this COVID-19 pandemic is putting a lot of stress and strain, not only on the healthcare networks and the hospital systems around the country, but it's also getting people to re-examine, their policy language on the property and casualty side and their employee benefits packages and things like that. Dave, have you seen during these times, you a lot of times will see innovation. Problems crop up, and then people try to solve problems, and innovation happens. During this time, these 6-7 months, have you seen a lot of activity in that space that's been driven by the COVID pandemic?
I would say we've seen two types of activity. One is companies that were invested in some cases, and others that were not, that are getting more rapid adoption. So these would be in the enabler category that Ben talked about before, that are partnering with insurance carriers, partnering with insurance agencies. And there might have been carriers, for example, that were dipping their toe into the water of automation. And COVID has accelerated that path. so that existing customers might be accelerating the use and going much more broadly, more quickly, and then contracts are getting signed more quickly as well. We've also seen, and this is a little more nascent, but we have seen solutions that have come to us to address specific COVID-related issues. Now, these are very new startups, obviously, because they didn't exist prior to March. That's a little bit different category. There's nothing we've pulled the trigger on there, although we've continued to invest post-COVID. We've closed on 3 investments since COVID started, but nothing that specifically popped up just to address it. Just some things that were probably well-timed and well-suited for a more rapid digital advance.
Sure. Ben, what have you guys seen? Have you seen this virtual era that we're in right now? Has it helped or hurt what you guys are doing?
I think pandemic accelerates trends broadly speaking, right? And so there's a great chart that's made the rounds of how you saw kind of several years worth of e-commerce adoption occur in just a few weeks in March and April. I would say across our entire portfolio, which covers financial services very broadly beyond just insurance, we've seen a similar degree of acceleration of the digitalization of the industry, whether it's in payments, insurance, banking, capital markets, personal finance. You can kind of, it's all played out very much so. There's a lot of nuance in that, and it can be sort of sector by sector. Things on consumer facing use cases accelerated much faster than things on B2B use cases, which is somewhat sensible. Businesses had a lot of really thorny problems to navigate in March, April, and May, and it just slowed them down. But now the business side is actually accelerating faster than the consumer side at the moment. Generally what we have observed is there's a tremendous surge of activity, even though the conversions on that activity have largely fallen below kind of pre-pandemic rates, which nets out to still most of financial services being frankly a net beneficiary of pandemic onset. I think, but there are peculiar challenges. I mean, we have an insurance business that is growing like a weed before pandemic and started growing even faster during pandemic onset, but they can't get incremental agents licensed by the regulators because the regulators have been closed for a few months. So it puts a brake on growth. And you see these kinds of idiosyncratic consequences of the pandemic, both to the good and to the bad across our portfolio. And I think it's just, we're still in an unusual time for doing business. And irrespective of, hey, lots of people are working from home and there's just a lot of political, medical, and everything else uncertainty, all kinds of things that you would typically just take for granted aren't working in the way they normally do. And that creates friction. There's more friction, I would say, in general in the ecosystem than there would have been in January. But I think if there's a single overwhelming takeaway as it relates to financial services broadly from the pandemic, it's that, everyone in the United States sort of went home and discovered how much they could do on their phones and tablets from a financial services standpoint. And that leads to everyone who touches financial services going, oh, wow, like the future is actually going to look a lot different than the past did. Like, am I really going to walk into a physical branch office of a nationally branded insurance company to buy insurance ever again in my life? Millennials never did that in the first place. But I think boomers are now going, I don't have to do that anymore. And like, I'm not going to do that anymore. And that has really profound consequences. And when the incumbents all go through the exact same realization in a hurry, the sort of VP of innovation who was like off on a ledge for the past few years, pounding the table about how the industry is changing around you, suddenly they're like center stage. And that matters. And I think that's going to be the real change over the next several years that we see.
Speaking of the next or go ahead, Dave.
I'm sorry, Tim, I didn't mean to interrupt, but related to what Ben was saying, we're backed by 13 insurance carriers, and they invest not only for a return, but they're trying to accelerate their own innovation efforts. And when you mentioned the VP of innovation, sort of sitting over in the corner, I have to say, with our investors, they are very much front and center, and it has really pressed the accelerator for the conversations about what do we do to meet that customer experience expectation as it has changed dramatically here in a very short period of time. Not that they weren't on the path already to some degree, but it has really changed the perspective.
I think the urgency of a whole host of problems and discussions just inflected over the past 6 months inside almost any incumbent financial services firm.
Ben, you mentioned looking forward to the next couple of years here. Bea, what are you most excited about for the next couple of years, what the Insurtech or fintech space has in store?
Sure. I think there's a couple of trends that we're particularly excited about. One is how insurance can become a product to sorry, I'm not explaining myself. I hope you can edit this bit out.
Just swear a couple times and then they'll edit it out.
So we're seeing kind of two things. One is like actually getting traction from the broker channel, right? I think up to now there's been a lot of intention, but it's been a slow moving distribution. I think now, thanks to COVID, it has changed the mindset of many people, and we're very excited about the companies which are being built or which have been built and have just not really hit that hockey stick moment yet to really hit it in the next sort of 6 to 12 months, thanks to this trend. And another is just how new approaches to risk, right, or products. For example, one thing that hasn't been mentioned that I'll just quickly touch on is, COVID has led to a change in the cycle, right? The market is hardened, and that actually means that players are retreating from certain types of risks, and there are pools of risk which are being left, I don't want to say unserved, but underserved. Right, that's really interesting because that's a sort of blue ocean that insurtechs can come into, and where traditionally either through distribution. So, for example, the wholesale channel increasing versus potentially some of the increasing, or rather moving into some of the traditional carrier spots, or maybe through products such as supplemental insurance becoming more in demand. I think there's a bunch of innovation that is happening, and pockets of opportunity that are being created thanks to this, and we're very excited about looking at those new opportunities.
What are you excited about, Dave?
There's so many areas of technology that I think are going to advance more quickly now in the Insurtech, and we also do fintech and healthcare, but we're primarily focused on Insurtech. That I have to say, there's not much that I'm not excited about in some sense. I'm very excited about the portfolio that we have because I think that our companies by and large are well positioned to be able to accelerate their growth now. And I think that there is the sales cycles and selling into the insurance sector are going to shorten. One of the things I think that's been a real challenge in the early years of Insurtech investing is that sales cycles have been longer than funding cycles in some sense. It's just taken a long time for adoption. And I see those sales cycles being reduced, the time to actually get new sales reduced, and I think that will accelerate the growth. And again, make a very efficient use of capital, leading to more attractive returns.
And before we wrap it up here, Ben, I do have to ask, as a guy named Ben Savage that lives in Southern California and works in the venture capital space, what gets brought up more, Boy Meets World or Shark Tank?
Boy Meets World, for sure. And the other Ben Savage is a very nice guy. He's friendly with my wife, actually. And, we used to run into each other with some frequency, including like in the grocery store, which was always sort of funny. So definitely the actor Ben Savage, who periodically, possessions and goods of his will show up at our front door by accident, which is also entertaining. I once got a box of 36 pairs of sneakers that some sneaker company was trying to gift him. So,
well, hang on to those then. Outside of your next interaction with the other Ben Savage at the grocery store in Los Angeles, what are you most looking forward to in the next 2-3 years here in the fintech, insurtech space?
Yeah, I think in insurance, the part of the value chain that we think startups have not so far done a particularly good job of addressing, in part because incumbents do a really nice job with it, is actually the core risk pricing function. This is more related to carriers than brokers, I would say generally, but carriers turn out to be quite good actually at pricing risk. I mean, this in some sense is really the guts of what they have to get right. I think the world is evolving. There are some new risks that are emerging, new lines of business that are emerging. Cyber is one that nobody, frankly, I think has any clue what the true risk levels are. But there are all kinds of new risks in the world. And there's always some degree of room for improvement, certainly like climate change affecting all kinds of cat risks and things like home. But P&C broadly, I think, are changing traditional underwriting. And we think there will be a cohort of startup companies that really bring true technology skills, in particular the deployment of artificial intelligence and machine learning tools to help actually price risk better, especially in the face of novel data sets that are emerging. And there might be an opportunity for new entrants to be both disruptors and enablers, frankly, in this part of the value chain, and we're pretty interested in that. I think a lot of the low-hanging fruit of, oh yeah, I can just go build digital distribution in X, or I can help with a workflow engine for brokers and things like that. Some of that's already been built. But if you look a little deeper into the value chain, I think the guts of risk pricing turn out to be an area that we haven't really seen a lot of startups be successful. It's a challenging problem, and the incumbents have historically been very good at it. But there are unique challenges that are starting to emerge where the incumbents may be a little less successful and create a window for new entrants to thrive.
And this is when I say I have a company that we should talk about, Ben.
Okay, great. Look forward to that.
Well, I'm glad we were able to end on that connection then. So Bea Del Rio, Dave Miles, Ben Savage, thank you so much for joining us today for this BrokerTech Ventures webinar series. It's so fun to connect with people all over the country when we have interests that are very similarly aligned. So thank you so much for coming on.
Thanks so much for having me. Appreciate it.